Okay, let's go ahead and get officially started. Welcome to today's webinar. It's titled The Three Most Effective Strategies for Managing Your Retirement Portfolio. My name is Jim Penna. I'm the Manager of Retirement Services here at VectorVest, and I'm really excited about this. I hope you are excited about it as well. In fact, my promise to you today is this, that in this webinar, you're going to see how you can build wealth, transform your legacy, and live financially free. Okay. Now, I know you probably get flooded with emails promising to help your retirement. And if you're like me, you're probably skeptical a bit and thinking, yeah, well, go ahead and prove it. Well, that's what we're here for. Now, we've been doing this a long time. In fact, VectorVest started way back in 1988. And just as an example for what we do in retirement services, in 2017, we began tracking our model portfolio called the Retirement Growth Portfolio, and its averaged annualized rate of return has been over 40% over the last just under 5 years. 40% annualized rate of return. Another portfolio we use, this is a strategy we'll talk about today, was started even further back. It has an annual average rate of return of about 22% annually. And because it is a dividend growth portfolio, that doesn't even include the nearly $50,000 in dividend payouts we've received over this time frame. Okay, and nor does it include the power of reinvesting those dividends if you choose to. So some great results. We're going to go ahead, like I said, we're going to prove that to you. Another way is a note from one of our clients. Jerry told us about his ability to generate consistent monthly income now after going through our training. Right, he went from being hit or miss with his trading and having absolutely no methodology to generating consistent monthly income to where he is now generating 2% extra each month. Now, this webinar is built on results, and I'm going to show you the system that we use to achieve these results. So if learning how to do that sounds good to you, now is a great time to turn off all distractions. Close your door, turn off your cell phone, close down any other windows on your computer. Don't multitask, or you're going to miss something important, I think. So I want you to stay focused, give this your full attention, because you'll be learning something that can make a huge positive impact on the rest of your life. Now, here's how to know if you're in the right place today. You're in the right place if you're worried about the next market collapse wiping away a good chunk of your nest egg. And that's causing you to be ultra conservative so that you're not getting the gains you see others getting. You want to grow your account steadily each year, but it seems like every time you buy something, the market or the stock that you pick drops and your portfolio goes nowhere, it just spins its wheels. You're in the right place if you don't have an income source that is as steady or as big as you need it to be, and it's causing you to scale back your lifestyle and not do the things that you want to do. Maybe you fear you won't be able to retire when you want, and that you might need to rely on others to take care of you. And you're in the right place if you might be one of the many people over 65 who still have to work, not because you want to, but because you have to. Or you're worried that someday you will be in that position. So let me ask you guys, does any of that ring true to you? Does that ring a bell for anyone? Let me know in the chat box. Just type in yes or no in the chat box if any of that rings a bell for you. Yeah, and here they come. It takes a second. Bunch of yeses coming in. Lloyd and William and Salvatore, Bruce. Yeah, it does. A lot of these things come into play for us, but you're in the right place, right? If you're answering yes, you are in the right place. After decades of working with retirees, we've identified, choking here. We've identified the root cause. Right? We've found that the real problem is that your retirement investing model is broken. Right? Now, all it takes is a couple of minor tweaks, and you can get it fixed. Once fixed, your retirement will be on solid footing once again, and that's what we're going to do here today. The model we use and that we have proven to work is what we call the 3Ps investing model. And the 3Ps are profit, provide, and preserve. When you think of profit, you can also think of it this way. Think of the word growth or capital appreciation. Okay, that's what we mean by profit. And when you think of provide, think of it as providing income. So we're talking about a system to generate a consistent income. And then finally, when you think of preserve, also think of the word protect or defend. Preserve your capital. It's a protection plan to preserve and protect your net worth. And remember my promise from earlier, to build wealth, transform your legacy, and live financially free. To do that, you need to grow your investments, you need to generate income, and you need to, most of all, protect your capital. When you do all three of those, that's when you'll have financial freedom. So the first shift you need to take to make this happen is the shift from not being in control of your own retirement to where you take control of your retirement. After all, who cares more for your money? Is it you or is it someone else? So you might think you don't have the time or the knowledge or the skill, but you're going to see today that you can do it. It doesn't take a lot of time. You probably do or will certainly have the knowledge, and I'll show you how to leverage off others so that you don't have to do everything yourself. So I want to talk about, now that you've decided to take control, I want to talk about the 7 signs that your portfolio will not be ready for retirement. Okay, there are 7 signs that show your portfolio will not be ready for retirement. Even though most people say they care more about their own money than anyone else would, what do most people end up doing? Well, number one, first, most people trust the government and Social Security to provide the income needed to retire happily. Now, that alone raises many problems. 60% of non-retired workers feel Social Security won't even be around when they retire. And even if it is still around, the Social Security website states that Social Security was never intended to be someone's sole source of income to begin with. Now, the average Social Security benefit is just over $1,500 a month before Medicaid premiums are deducted. So on average, you're left with about 16 grand a year. Obviously, that's not going to be enough, so what else do most people do? Well, number 2 is a lot of people just save their money. You put your hard-earned money away, counting on it to be there when you retire. Here's the problem, though. With interest rates so low and not expected to really rise much anytime soon, inflation is actually higher than the interest rate you're receiving, especially now. So by saving your money, you're actually losing money because your dollars are being devalued. Next, there are others who just take the set it and forget it approach. Right? Those are the folks who put their money into mutual funds, an IRA or 401k, and just simply hope for the best. Unfortunately, when the market drops and wipes out 30 or 40 or 50%, many people end up delaying retirement or even may have to go back to work from retirement. The other thing some people do when all else fails is simply folks go play the lottery. Right? I remember there was a commercial which advertised the lottery. You may remember it said, all it takes is $1 and a dream. Well, for many, that $1 turns into 2, and then into 10, and then into 50. And sometimes you end up spending a few $100 a month on those dreams. Believe me when I tell you, that is not the best retirement plan. Sometimes folks will go out and hire someone to make decisions for you. That's what our friend Rob here did. He retired in 2005, and as we all know, the financial crisis hit later in 2007. And he said we had used professional advisors for direct shares and a few managed funds to build our retirement portfolio. And they all told us to ride it out. By mid-2008, our portfolio had lost 40%, and our retirement plans were in ruins. We were in total despair, and it looked like I'd have to come out of retirement and go back and find a job. Now, maybe not as dramatic of a drop like Rob, but Carol describes another typical result. She hired an advisor in 2013 to help manage her inheritance after her father had passed away. And she said that by early 2017, I finally had the time to take an in-depth look at what the broker I hired was actually doing. And Carol said she was shocked. It was a mishmash of cookie cutter funds, and after their fees, the net result was a measly 1% annual return during a time when the market did much better. Okay. Sign number 6 is that when you end up spending less. And when that happens, you end up tightening the wallet. And if you're cutting back on your spending because you're worried, that's the sign that your portfolio is not ready for retirement. And then finally, if you decided to work longer than you originally intended, that also is a sign, typically meaning your portfolio is not ready for retirement. So hopefully you noticed there was a theme here. If you're exhibiting those signs, it's a clear indication that you need to take control. Remember, there are hundreds of thousands of people out there just like Rob and Carol who trusted their money to people who thought they were more knowledgeable and more skillful, who ended up losing 40-50% of their retirement savings and not coming close to achieving the gains that they expected. So even if you have a financial advisor managing some of your money, you still need to pay attention. These strategies will give you the techniques to both manage your own money as well as give you the information you need to watch over the work being done for you by any money manager. So as we go through these strategies, I want you to see how there are things you can do. Right? And you can do these things in less than 30 minutes a week. So let's go ahead and do that now. We're going to begin with preserve, right? Protect your assets. So now that you've decided to take control, the first thing you need to do is understand the importance of protecting your assets. Instead of worrying about the next market collapse, wiping out your net worth, your nest egg, right? You need a strategic defense system to protect your assets. Now, a lot of people get caught by surprise when the market drops. They're not sure what to do after it happens. You hear people on TV and advisors talk about what you should do now and how to make your money back. That's a little bit too late, right? We think that you need to insure yourself. Right? Just like you buy an insurance policy on your life, your home, your car, you need to insure your portfolio as well. Let's take a look at the market. Here's a look at the market since 1999. Okay. Now, let me know in the chat box if you've ever bought or owned a really good stock and watched it drop when the market dropped. Okay. Now, I'm not talking about any old stock. I'm talking about a good quality stock that you purchased because you said, "Wow, this is a company that makes money," and then you're left scratching your head as you watch it fall. Right? And yep, I had a lot of folks typing in yes. I can't even keep up with them. A lot of folks typing in yes. Yeah, we've all been there. We've all been there. So what I want to do here is zoom in on a few of the biggest market moves that crushed a lot of people. So I'm guessing there are people in the room today who held stocks or managed their own funds through the bursting of the dot-com bubble. Okay, I'm going to guess there are some folks there. We had Lynn let us know that during the dot-com boom, that he took 80 grand and increased it 5 or 6 times over. However, in 2000, he proceeded to lose almost everything over the next 2 years, and to use his words, he was pissed and needed someone to blame. Now that happens way too much, right? When you make money during the uptrend, and if you don't know how to protect it, you give it all back and spend years trying to recover the losses. Here in 2008, when the housing bubble burst, the average mutual fund dropped over 40%. And many people like Robert, we talked about earlier, he lost 40% of his retirement and thought he'd have to come out of retirement and go back to work. And just last year, right, we all know that the S&P dropped over 34% during the pandemic sell-off. How many of you have had your financial advisor call you leading up to any of these events to warn you? Is there anyone who can say that they did? Okay, but what happens after the event passes, after the drawdown, you might get a call saying, "Hey, by the way, you just lost 30%. Thanks." Okay, so which brings us to today, to where we are now. Many folks are worried about the next market collapse. We've had a big run to the upside. Well, the truth is that you can't predict the market, right? Some people say you can't time the market. What we say is the truth is that you can't predict the market. What we can do is analyze what's going on and recognize the market trend. Because even though the markets on a daily basis may have their ups and downs, if you look at the big picture, you can clearly see the market trends. Not only that, when you're doing it right, you can see even the smaller trends within the bigger trends. So we may see the market on a daily basis go up and down, but it does over time trend in a given direction. Surprisingly, you don't hear this information from the talking heads on TV. They rarely would say, "Hey, it's time to get out. The market is in a downtrend." Very rarely do you hear that. Okay. So I want you to be careful where you get your information. It's good for their business when people are investing in the market. Advisors still get their fees, whether the market's going up or down. So you need to be careful where you get that information from. So let's look at how to use the right information so you'll never be on the wrong side of the market for more than 1 or 2 weeks, right? The daily trend ups and downs are what they are, but you'll never be on the wrong side for more than 2 weeks. So what you're about to see will ensure your portfolio never collapses again. So you want to make sure you have a system that allows you to determine and recognize the market's trend or direction. Some people use things like moving averages on the S&P. I use the guidance from VectorVest. Whatever you do, I suggest you don't listen to the talking heads on TV. Instead, you should have a system which is not emotional, which is based on empirical data, and has a historical track record. Let's take a look at a few of the major market moves that we talked about earlier. And these were all game changers in many people's lives here. But let's take a look. Let's start by looking back at the bursting of the dot-com bubble. Right now, every night we provide guidance through the VectorVest program, such as this. Right, you can see where the market peaked leading up to 2000. And back on March 17th of 2000, about a week before the peak, right, in the strategy section, VectorVest said, "I believe that the rally is exhausted and that downside risk outweighs upside potential. And prudent investors should protect profits and take defensive actions such as buying puts. Consider any rallies as opportunities to sell stocks at higher prices." Right? That was tremendous guidance. Right? So were you investing back then? And if you were, would that have been beneficial to you back then? You can type that in the chat box. I know the answer is yes, but you guys can type it in. Let's fast forward to the next big market collapse when the housing bubble burst on November 2nd, 2007, just days off that market top again. Okay. We had said a word to new subscribers. The confirmed down signal that we received yesterday could be the entree to a long bear market. Could be the entree to a long bear market. Okay. And it went on to say later on, don't be deceived by the endless parade of experts who will appear on TV and other places telling you to buy stocks. This is not the time to buy stocks. Would that guidance have helped you protect yourself? Let's move to the most recent drop, which happened just last year in February, as we all know. Back on February 14th, okay, just days before the peak, we noticed warning signs in the VectorVest program in our market indicators. Okay, and we wrote in our strategy section, the price of the VectorVest composite continued to move higher this week, closing at a new record high. However, as the price hit a new high today, the buy-sell ratio, or the BSR, closed lower. To add to that, if we look at the 3-month market timing graph, we see that while the BSR, RT, and the MTI closed higher week over week, they are at lower levels today than they were during the January high. This bearish divergence suggests that downside risk outweighs upside potential. Now, does that sound familiar? That's what we said back in 2000. Right? And don't worry about BSR, RT, and the MTI if you're new to VectorVest. Just know those are our market timing indicators, and they clearly gave us some great guidance during these times. So a week later, we said that prudent investors should not buy stocks at this time, and aggressive investors and traders should play the market with a bias to the downside. Okay, that's when we were giving this guidance. So I'll ask again, would that have been helpful? Yes or no? So this time I want you to interact with me. Okay, does that kind of guidance, would you expect that to be helpful? You can type in yes or no. Yeah, there we go. I just want to make sure you guys are interacting with me, and here they come flooding in. A ton of yeses. Yeah, without a doubt. Right. So now that you know what to look for, you need to know how to react. Right. So let's do a case study on portfolio insurance. We'll take a look at how to protect your net worth. Okay, it's called portfolio insurance. Now I'm going to use a time frame back in 2018. There was another big market drop towards the end of the year, and I'm going to zoom in on that period right here. Okay, a lot of people, with all the downturns and all, this is one I really remember clearly, in October down to Christmas Eve of 2018. So let's go ahead and zoom in even closer on this same time frame. So this is the same time frame zoomed in. Near the beginning of October, the VectorVest timing system signaled a confirmed down call. That's our most conservative overall look on the trend of the market, and that came on October 4th of 2018. That's the signal, that's the flag to become defensive, to become strategically defensive to protect your portfolio. So what could you do? Well, as an insurance policy, you could buy put options on the SPY, which is the ETF that tracks the S&P 500. Okay, basically, if the S&P continues to fall, our put option would increase in value, offsetting some of the losses on the stocks in your portfolio. If you own a put, it gives you the right to sell someone else a stock, or in this case the ETF, at a certain price by a certain date. The value of that put rises when the value of the underlying asset falls. Just like an insurance policy. Right? You have an asset. If it's damaged, your insurance policy offsets the losses. The same thing. That's what a put option does for you. Okay. So for a $100,000 portfolio, you could go out. There's a basic equation we use. You'd go out and you buy 3, maybe 4 puts for $604 each, which in this example would have cost you at that time $1,812 for an insurance policy on a $100,000 asset. Think of how much you pay each year to protect your car. And I'm guessing, most likely, your car probably isn't worth $100,000. Some of you may have one, but for the most part, your car's not worth that much. So let's see what happened with this insurance policy. Well, as we know, the market dropped at expiration. Right? Your puts would have had a profit of just under $12,000 from the $1,800 you spent. Profit would have been $11,900. That's at expiration. Now, even if you had closed the trade and mitigated the loss anywhere in this area, you still would have had an amazing offset to that drawdown that we experienced in late in 2018. Right, a client I worked with, his name was Elaine. He wrote to me about a portfolio insurance he placed actually shortly after that, at the beginning of 2018, shortly before that, I'm sorry, at the beginning of 2018. And he wrote me a note saying, Jim, because of your teaching, I hedged my portfolio at the end of January 2018 with puts on the SPY. Saved a section of my portfolio. He invested just $835, and he closed his position a few weeks later up over $23,000. So he went on to say my portfolio was not only saved, but it was brought positive through that big drawdown. So that was Elaine. So let me ask you guys, how much would this have benefited you during the prior market collapse? How would that have benefited you there? Yeah, would have mitigated your losses, right? It reduced the drawdown. That's how being defensive and using insurance would be the way to go. Okay. So that the next strategic shift is that you need to go from worrying about what could happen and being unprepared when it does happen to where you have a strategic defense system in place which protects your hard-earned assets, your net worth. Protection is in my opinion, the most important part of your retirement investing, and it's how you'll be able to build wealth, transform your legacy, and live financially free. Okay. The second P in our retirement investing model is profit. So we're going to move on to profit. Grow your portfolio. Now that you have your strategic defense system in place to protect your assets, you no longer have to be ultra conservative when investing. Instead, you'll be able to take full advantage of the market upturns to grow your portfolio. Now, in the past, you might have been plagued by buying stocks that didn't go anywhere or were too volatile, causing you to spin your wheels, as we talked about earlier. So to fix that, what we want you to do, right, we need to have that mantra of buying safe stocks, rising in price only when the market is rising. So for our retirement accounts, we want to look primarily at a stock safety, more so than anything else. So while it's fun to hit the home run, we know what most home run hitters do when they don't hit a home run, right? What do most home run hitters do when they don't hit a home run? Right, they strike out, right? We don't want to strike out. The home run is enticing to some people that it's so enticing that when they go out and invest, right, you can end up trading or investing in a way that's totally different than who you really are or what your objectives are and what you want them to be. Right? You invest like you're someone you're not. If you're not seeing the returns you want, the answer is not to go faster. Don't try to become a day trader or a really short-term trader to make your money back quickly. Right? We use the analogy of teaching my two boys to drive when they were younger. If they were struggling, I didn't tell them to slam on the gas pedal. I wouldn't do that. I told them to slow down. And it's the same thing here. You have to do the same thing. You have to slow down, right, and reevaluate. And it all starts with this quote from our founder, Dr. Bartolito, and our mentor. And he said many times, he said to me, good portfolio management starts with buying the right stocks. Okay, and it's just like a sports team, right? We see a team here. If you fill a team with great players, just having those great players on the field help you to win, right? Help you to do better. So you can implant any sport you want, right? But you want the best team on the field, on the court, on the ice, whatever you want to do. Right? So if you look at it that way, by filling your portfolio with really good safe stocks, just those good stocks alone will help your portfolio do well. So what I want to do is share a checklist of what we look at when determining the safety of a company. And these are just several factors that go into analyzing the safety. One is earnings consistency, right? Probably the most important one. How often the company meets or exceeds earnings estimates. We look at things like the company size and the price volatility of the underlying stock, or the company's debt to equity ratio. It's a very important factor for a company to overcome any headwinds that it runs into. Right? Do they have a favorable debt to equity ratio to manage those tougher times? Business longevity. How long has the company been around? And then finally, dividend history. If it pays a dividend, and not all safe stocks have to pay a dividend, but if they do, they better darn well have a strong history of paying and growing that dividend. Right? So again, you don't need to be a stock market genius to do this. You don't even need to spend a lot of time to do it. Right? You're going to leverage off others. I told you didn't need to be a stock market genius to do this, right? So what I want to do is go into the VectorVest program. Okay. And I want to walk through this with you. Now, I'm here on the home page in VectorVest, and what I'm going to do is click on the Viewers tab along the main toolbar here, and it's going to take me into a watch list that I've created of about 40 stocks, technically 41 stocks here. All right, this list is of 40 very well-known companies. I put this list together. It's made up of places where you shop, where you eat, what you drink, where you spend your money. Okay, so that you're familiar with all these stocks, right? So you see, if you own a home or you like to garden or whatever. I know you go to Lowe's or Home Depot. You got a computer if you're watching this. You go to Target or Kohl's if you need, back to school stuff for kids or grandkids or whatever. You go to the bank. I know y'all have Netflix. You love Starbucks coffee, and I'd be surprised if everyone in the room hasn't ordered something from Amazon. So you get the point. I just took a whole bunch of stocks that you're very familiar with. Okay, and what I want to do here is take a minute and illustrate to you the power of picking stocks that are safe. Now, in this spreadsheet, we have these 41 stocks that we're looking at, and they are sorted. There's a default sort for the stocks, and it's by VST. VST stands for value, safety, and timing, and it's simply made up of these three indicators of fundamentals and technical analysis. It's just our flagship indicator when we're analyzing stocks. And it defaults to that. Now, because we're looking at retirement stocks, right, we want to be even safer. So we use the VectorVest indicator called relative safety. Okay, relative safety. It's a very important indicator in our program. And I'm going to resort this list of 41 stocks with, instead of the top VST, I'm going to sort them with the highest relative safety number coming to the top of the list. Okay, and then I just want to illustrate something to you. Now, we have the ability, if I take this back in time, and I'm going to click on a date box, and I'm going to take it back. The number I've been using, I take it just January of 2019, just the first trading day, from over 2 years, almost 3 years ago now. Why? Because it gives us a good look at different market conditions over that time. Takes us through the pandemic sell-off, takes us through some up and down markets. This is what this watch list would have looked like back on that date at the close, sorted by relative safety. Okay, again, relative safety takes into account all of those factors we talked about. Now we have the ability here in this local toolbar. I can click quick test the top 10 stocks. And when I do that, it automatically runs a test from point A to point B and tells me the return. So each stock, the beginning price was the closing price on January 2nd to the price of the stock as we speak. Right? And we're able to also compare those returns to the S&P 500. So you'll see this list of well-known companies from point A to point B is up over 81% versus the S&P at 79%. Right? All winners, all top 10 performed very well. Now, to illustrate the power of relative safety, what I want to do is click on RS again. And when I do that, it now takes these 41 stocks and sorts them RS ascending, with the lowest relative safety indicator coming to the top of the list. Let's go ahead and hit quick test top 10 again. And for that exact same time period, well, what happened? We did have some winners. 6 of them over that time frame were winners, but 4 of them are losers, and our return is only 31% at a time when the overall market is up close to 80%. Okay, so that's just a quick illustration of the power of relative safety. Now, to take this a step further, of course, you're not going to go out and buy shares of 40 companies and run basically your own mutual fund here. So what I want to do is see what happens when I leverage off VectorVest and only buy the top 10 stocks. So what I'm going to do is go to the here in the Viewers tab. I'm able to scroll up and go to our stock viewer. And when I go to the stock viewer, I'll show it to you in current time right now. We're currently tracking. Let me run that again there we go. We're currently tracking nearly 9,000 stocks in the VectorVest program. The stock viewer page default sorts them with the VST, the highest VST stocks at the top of the list. Now, what I'm going to do is what we've done. Well, it held from last. These are now sorted by relative safety. Right. This is what the list looks like as we speak. Align Tech is the highest ranked relative safety stock, along with DHI, Facebook, and Google. Because we're not going to limit ourselves to those 40 stocks, right? I want to find the cream of the crop, the best of the best here. And so I can go back to that same date. And when I take the top stocks from that date, sorted by relative safety, and I quick test those to the current time, you can see it does significantly better than limiting yourself to just that list of 40 stocks where we could find the cream of the crop here. So we're up over 107% versus the 79% on the S&P 500. I like to sort them, see which ones perform the best over that time frame. FTNT was the top pick. Now here's the biggest takeaway I want you to have when we talk about relative safety. This is the best visual I can give. I'm going to right click on FTNT and I'm going to open up a stock graph. And when I do that, it defaults to a 1-year look. This is Fortinet Inc., FTNT. What you see on the subgraph here is the earnings per share with the price of the stock up top. That's a 1-year graph. Let's take it back a full 5 years, get even a better look. And what you're seeing is the power of relative safety. This is the picture of the stocks that we want in our retirement growth portfolio. Stocks with strong, consistent, and predictable earnings, whose price has that northeasterly direction along with earnings per share. This is what we're looking for. This is what high relative safety stocks will achieve for us. Okay, so that's what we're looking to accomplish when we're in these type of stocks, right? So when we build a portfolio of those type of stocks, as I showed earlier, our retirement growth portfolio has nearly doubled in less than 5 years. So we have this portfolio where you buy good stocks only when the market's rising. Right? By doing that, we minimize drawdowns. We still have tremendous growth. This has averaged over 40% annualized rate of return. And so let me ask you guys, are you familiar with the rule of 72? Anyone familiar with the rule of 72? If you make 10% per year, it would take you 7.2 years to double your money. If you make 20% per year, it would take you 3.6 years to double your money. And if you can make 36% per year, it would take you 2 years to double your money. Okay, imagine that. Right? This is a 40% annualized return. So you might be thinking, are we rigging this? Right? Is this thing rigged? And the honest answer is yes. But you have to understand it's rigged in your favor. We're showing you how to buy safe stocks rising in price in a rising market. These are the results that we see. So I'm going to ask you a pretty straightforward question. If you could double your money every 3 years buying safe stocks, how do you think that would affect your overall retirement? How would that affect your retirement? While I take a quick sip of water. Go ahead and type that in. Yeah, Gabriel says big time. Yeah, there'd be a great effect. Yeah, here they come. It takes a second for them to come in. It would be fantastic. Yeah, it sure would be. Ramana, if I'm saying your name, Ramanuj, too good to be true. Well, it sounds too good to be true, but it is. It's an actual portfolio. Okay, so what we're looking at here is this next shift you need to make. It's to go from slow and stagnant growth to where you have solid growth portfolio strategy that has you buying good, safe stocks at the right time so you can steadily grow your portfolio. This is another important part of your retirement investing model, which will allow you to build wealth, transform your legacy, and live financially free. Let's shift gears a little bit. We'll talk about our third P in our retirement investing model. Okay, and that is to provide. Remember, you don't want to rely on your pension or Social Security to carry you through retirement. In order to continue living the lifestyle you desire and you deserve, you need to open up new income streams. Now, there are two main ways that you can do this. Okay, two main ways. First, you want to get paid dividends. One of the benefits in focusing on really safe stocks is they typically pay a nice dividend to their shareholders. and you want to be able to capitalize on that. Now, I know, everyone knows about dividends, right? But finding the best dividend paying companies for a lot of people, it's not always the easiest thing to do. For example, a lot of folks will go in, if you just Google dividend stocks, you get 850,000 results. And what happens here is you just get stocks with the highest yield. Right? They're just going to sort them by yield. But are they good, safe stocks? The worst thing to do is just go out and chase a high yield without knowing the quality of the underlying stock. You go to NASDAQ.com, you get something similar, right? You get the yield, but is the dividend safe? Does it grow? Is the company safe? Other sites do the same thing, but they leave you without any real information on the underlying company. So let me show you one of the things that we do here. Inside the VectorVest software, there are several lists that are pre-built for you. Right? I showed the watch list viewer. That was a watch list I created, but we have them built in as well, as you can see here. This example that you're looking at is a list of the companies that have increased, not only paid, but have increased their dividend each year for 25 years or more. And remember, they're not in order here randomly, right? These stocks are sorted so the ones with the best combination of value, safety, and timing, relative value, safety, and timing, come to the top of the list. So the very top one here is West Pharmaceuticals. I want to show you the graph of this particular stock. It's one of my favorite companies. I own this company. Notice how the dividend continues to grow each year. This graph goes all the way back to 1995. Right? The dividend has grown. The earnings per share is strong. The earnings growth rate is strong. And so again, it's not a coincidence that both of these have this northeasterly direction. Okay, these are the type of stocks you want to add to your dividend growth portfolio. In fact, that's what we do in another portfolio that we manage. It's called dividend growth, because not only are you getting dividends that are growing and being paid, but you're also getting growth from capital appreciation. As a retiree, those are the two things that you want and need. Now, this is a little bit longer look back. It's important to understand that, a dividend growth portfolio, you do have to have that longer term outlook. This is a 189% gain as of just this week, but that doesn't include the nearly $50,000 in dividend payouts that have come into this portfolio. This number does not include that 50 grand. So think about that. You're averaging an additional $5,800 in income each year through the dividends. Right? That's about $490 a month, just under $500. Would an extra $500 a month help you out? You can type it in, yes or no. I know it would help me. I know it does help me, for sure. Okay, so that's dividends. Now, there is a second source of income, and it's similar to collecting rent from your stocks, is the way we talk about it, right? Collect rent from your stocks. So you'll be able to use one of the safest, most popular, easiest to implement options income trades that are available. Right? It's so safe that it's the main option trade retirement accounts will allow you to do. I remember I took my Series 7 back in 1992. At that time, the only option trade you can do in an IRA account was a covered call. Right? Things have changed. You can do a lot more now, but at that time that was the only trade you can do. So selling covered calls is an excellent way to generate more income in your portfolio. So let's take a quick look how a covered call actually works. Now, here's a graph of a stock, just ABC stock, that's trading at this point at $176 per share. So instead of just owning the stock and hoping it goes up, we can generate income and lower our cost basis by selling a covered call against it. So stock's at 176. Now you either already own it or you go out and buy 100 shares of the stock. You need to own at least 100 shares. And then you can simultaneously sell the call against it. So you either own it or you buy it at the same time. Selling a covered call is simply this. It means someone is willing to pay you money today for the right to take your stock away at a higher price at a later date. Right? If you're selling the call, the buyer has the right to call away your 100 shares at a specific price by a specific date in the future. Okay, so what does that look like? So with this stock, ABC stock here trading at 176, I go out and sell a call option and I receive $1,033. I sell someone else the right to take this stock away from me at a higher price at some point in the future. And they're going to pay me $10.33 per share to do that, or 1,033. So what could happen? Well, first of all, in this kind of what if scenario, the profits from the call you sold give you cushion. And you would still have a stop in place just like if you had owned the stock outright. But because you lowered the cost basis by taking cash in, you got paid and you lowered that. So you have a cushion built in. And of course, we will have risk management techniques on the underlying stock. Now, the stock could go sideways. And that's fine because you get to keep, if it closes below that 180 at expiration, you keep the $1,000. Plus, you can go out and sell another covered call and generate even more income on that same stock. And then finally, what happens if the stock closes at expiration above 180? Well, you're going to make the max profit available to you on the trade. You get to keep the $1,000 and the gains in the stock right up to where your strike price was. So I made $4 in capital appreciation plus the $10.33 per share. Okay. By doing this each month, just look at it this way. If you had a 10 stock portfolio of about 100 grand or 10 grand in each position, you could be looking at roughly $1,500 per month in income. All right. In fact, if you remember Jerry from earlier, prior to learning this strategy, he had told us his investing, again, was hit or miss, and he had no methodology. Boy, those are the two worst phrases I can think of when you're investing and managing your retirement portfolios, that you're hit or miss or you have no methodology. After learning the covered call income strategy that we teach, Jerry's now generating, like we said earlier, 2% extra cash each month. So this time I have two questions for you. Okay, share with me in the chat box. First, I want to ask you, how many extra income taps do you have open right now? How many income taps do you have open right now? And second, what would that extra income allow you to do? Or another way to put it, what would that extra income allow you to stop doing? So take a second, go in the chat box, share with me your thoughts on that. Right. So, yeah. Someone saying no. Yeah, there's none. There's no taps open. Right. Bruce is saying income taps like water. Do you have a steady flow, Bruce, is what we're talking about. That's what we mean by taps. Do you have a steady flow of income coming in? Right. Right. Your life, your income will be safer, Mana says. Yeah. Okay, great. Gabriel says, yeah, he sells calls against his dividend stocks. Fantastic. Yep. Okay, so that strategic shift here is when you implement the provide piece to your retirement investing model, you'll be able to shift from not having enough income, right? And this is again what I meant by taps, right? It'll rust out on you. Right? You'll be able to shift from not having enough income to where you have a steady flow of consistent income, which will allow you to continue living the lifestyle that you choose or that you're used to when you retire and you become financially free. Okay. So I believe that you guys showed up today for a few reasons. Okay, this is what I believe. I believe you guys showed up here because you're worried about the next market collapse, wiping away a good chunk of your nest egg. And that's causing you to be ultra conservative and not getting the gains that you see others getting in this rising market. I think you might have come because you want to grow your account, but it feels like your portfolio is just going nowhere. And you're just spinning your wheels. That you don't have enough income to replace the paycheck that you were getting if you are retired. And that you fear you're going to have to scale back your lifestyle, or that even worse, you might have to rely on others. Right? That's not where you want to be. And even if you're doing okay right now, okay, are you where you want to be now? and you have no plan to get there. Okay, that may be the main reason why you guys are here today. So today I hope that you learned that several things. It's possible to take control of your retirement when you have a clear plan. Right? You don't need to be worried about a market collapse when you understand and have a strategic defense system in place to protect your net worth. I hope that you learned today that you can see steady growth in your portfolio by using a solid growth strategy. Right? And I also hope you learned that you can generate consistent income with new income streams using dividends and the power of selling covered calls. And the main thing I hope you learned today is that the secret to build wealth, transform your legacy, and live financially free is to make sure your retirement investing model includes the 3 P's of profit, provide, and preserve. Okay, so that brings us to the obvious question that you're asking right now, or should be asking. How do I create this type of system in my retirement portfolio right now? Well, you have a choice that you have to make. You can choose to do absolutely nothing and keep doing exactly what you're doing right now. But the same thinking will get you the same results. My fear is that you'll be in the exact same place this time next year or the year after, worrying if you'll have enough money when you retire. Now you can choose to do it alone, maybe put together some of the things you learned here today, and you can learn by trial and error, but mistakes can be very costly. Or you can choose to do what I did, what Jerry did, and what thousands of others have done, and that is to get right to the solution. Get right to it. Why do all the work on your own when there is training available that allows you to bypass all the trial and error and get to success much faster? So instead of taking the long way from here to where you are and want to be, learn how to take a shortcut. That way you get your retirement on solid footing as quickly as possible. I want to give you the plan that if you and I were to work together for 5 weeks, literally you and me in a room every week for the next 5 weeks, here's what I'd get you to do. Okay? It's a simple plan called the Retirement Portfolio Transformation. Now before we get to that, I need to point something out. Albert Einstein said that everything should be made as simple as possible, but not simpler. So it's important for me that you understand that this is not a get-rich-quick scheme. It's not some magic pill where you should expect results in the next 24 hours. This is serious and requires some effort on your part. So if you're not going to commit to it, then don't do it. It's not for you, and you should probably log off at this point. Okay, this is for serious people who take their retirement seriously and who are willing to put some time in and effort in to learn the system. But this is why VectorVest was created and why we have put together this retirement portfolio transformation for you. We put it together for serious people who want a simple plan to set up their retirement portfolio for success. Now, I know the system works, but you have to do the work. Right? There is no magic pill. Right? There's no such thing as go to bed at night fat, take a pill, and wake up thin. That doesn't work. There's work in the real world. You need a plan, and if you're willing to do the plan, then you'll get results every single time. So by transforming your portfolio, you'll be able to build wealth for you and your family, transform your legacy, and create a better life for your children, for your grandchildren, and you will have that financial freedom that I talked about. Now it's a simple plan called the Retirement Portfolio Transformation, and the easiest way often for me to explain the course is to map it out for you. So there are 5 modules to the course, okay, and they all will take into account the 3 P's that we talked about. The course will guide you through setting up the 3 P's, and first we'll build a strong foundation for your retirement. This is where you'll get a clear view of your goals and objectives. You cannot successfully build and manage your portfolio if you don't have goals and objectives. And one of the greatest quotes that I've come across explaining this is that what you have to remember, Right? A goal without a plan is just a wish. Okay, that's the importance of Module 1. You'll learn how to treat your investing as a business. We'll set SMART goals and objectives. That's an acronym that we walk through, some important ways to set those goals and objectives. We'll talk about creating a vision statement. Next, you'll learn how to increase your capital with a safe growth portfolio. We'll delve deep into the details of an investment plan that allow you the results that I showed earlier. Right? For your portfolio to steadily grow, you need to fill it with the right stocks and manage them the right way. In this module, we'll show you a tried and true process so that you can complete your profit transformation. And then in Module 3, you'll begin your provide transformation. Very similar to Module 2, but we'll do it by learning how to build and manage a prudent dividend growth portfolio. Right? Remember, dividends are a source of income every retiree should take advantage of. But not all dividend stocks are created equal. So you have to learn not just to chase the high yield, but to find the quality dividend stock. We'll teach you how to do that. So the outcome of this module is you'll know exactly how to identify the best candidates, the best dividend candidates. You'll know when to buy them, know when to manage them. Okay, a great module here. The modules 4 and 5 are essential, I believe, to managing your net worth. In Module 4, we'll complete your provide transformation by teaching you 2 of our go-to option income trades. Right? We'll talk about selling covered calls as we did, but we also add on selling put options. It's another way, very similar way to selling covered calls. We'll discuss the differences and the similarities in those. Every retiree needs an additional source of steady, reliable income. Right? Banks, bonds, Social Security, it's not going to be enough. Even if you've never traded options, you'll understand these 2 trades. We keep it as simple as possible. Please understand, you don't need to be an options expert to understand and implement a covered call. It's the easiest option trade, income trade there is. And buying a put option for insurance is also very easy to do. I'll show you how the trades work, when to implement them, and how to correctly set them up and manage them. So at this point, your retirement is set up for both growth and income. And then in Module 5, again, we'll learn how to preserve and protect that capital. Right? You cannot grow your capital if you don't know how to protect it. It's as simple as that. Right? A lot of people don't have a plan for when the market or stocks go against them. You don't want to just sit there and worry about what could happen. You need to be proactive. You need to take control. In this module, we'll complete your retirement transformation by teaching you how to preserve your assets. Okay? By learning all of this, at the end of this course, you will know exactly how to grow your account, generate consistent income, and protect your capital in all market conditions. Okay, so here's the thing. If I were to work with you one-on-one for 5 weeks, literally just me and you together going through this, it would cost $29.95, about $3,000 to do. So here's what I'd like to do. I'd like to give you access to the full retirement portfolio transformation course. Now, we've put the entire course together in a self-paced recorded atmosphere. So in addition to the course, you get a few limited time bonuses when you register today. And bonus number 1 is really my favorite part of these courses. It's 5 live mastery support sessions that we do. Okay, the mastery sessions allow us to implement what we learn in the actual teaching module. They're held during market hours and they're live, so we can implement and answer any and all questions that you have that guide you. And if you can't make these sessions live, it's not a problem, right? Because we archive them in our VectorVest University and our membership site. You'll be able to submit questions ahead of time to a dedicated email bin designated just for students. Okay, so you'll have a recording of the mastery session. You'll also have the ability to ask questions. Bonus number 2 is 5 weeks of access to my members only group coaching sessions. We have them every Tuesday at 2 p.m. Eastern Time. We have a group, and we're going to invite you for the life of this course. Each week you can sit with me while I find, select, and set up our income trades and walk through management of our other portfolios. Right? So basically each week you'll see all that I've talked about here today in action. Plus, if you don't already have access to VectorVest software, I'm going to give you access to the program for the life of the course. Right? It's the software I use to help me speed things up. Now, this is also guaranteed. It's completely guaranteed. You probably won't need this, but if for some reason you take our retirement portfolio transformation course and you actually do what I teach you, okay, here's the thing. Please listen. Not if you buy it, but if you actually do it, right? It will work for you. But if for some crazy reason it doesn't work for you, if you're like, the 1% that it doesn't work for, and you feel that we haven't taught you how to set yourself up for a secure retirement, then just send us an email within 7 days after the course ends, and we'll give you all of your money back. So that should give you the peace of mind. Now, we're very confident that you're going to love what you get out of this course, and you're not locked into any contracts with us at all. So again, after the course is over, do the work, do the assignments, and you're still not satisfied, I'll give your money back. Okay, so the total value of all of this, if you added it all up a la carte here, would be $4,300. Here's what I'd love to do. I'd like to give you access to the full course and all of the bonuses for the early bird price of $595. That's good through Monday at 5 o'clock. Okay, but if you're still in the room with me, don't go anywhere, because since you've spent the last hour with me here today, here's what I'd like to do just for you. If you order before the end of the webinar today, instead of paying the $595, you will get the low price of $495. Right? That means you'll get the full course. And by the way, you get 1 full year's access to the course. You get the 5 live mastery sessions that are archived as well, so you can watch them later. You have access to the software, VectorVest software, for the life of the course. You have access to the members-only retirement group coaching and our weekly covered call trade for the 5 weeks that the course goes on. So the $495 price will only be for those who register before we finish today. And John and Brian are here with me. Brian's going to come in. We're going to answer any and all questions that you guys have about what we talked about today, so you've got time to make a decision. Right now, also, if you're an elite member, the $495 price is even lower than our elite pricing. Right? So if you're an elite member with VectorVest, now would be your best time as well. Now you can go to www.vectorvest.com/transform. Okay, we also put that link into the chat box. So you can go to your chat box now and click right on that link. Okay, when you click right on that link, it's going to bring up the page for you where you can enroll today for the $495. Okay, so you can click right in that link in the box. Remember, this is today only webinar deal. Okay, let me just finish up here by saying, before we get to any questions that you guys have, there's a saying that the best time to plant an oak tree is 20 years ago, so that you can be sitting under it now enjoying its shade. Okay, you know when the second best time is, right? Well, that's today. So it's never too late to begin to prepare yourself for retirement. Now, here's a question you need to ask yourself. How much did it cost you back in 2000 and 2008, if you were investing then, by not having this information? How much will it cost you moving forward if you're not prepared? If that number is more than $495, then let's fix things once and for all. Right? Let's make it so you never have to experience those drawdowns again. Let's make it so that this year you begin to safely grow your retirement and generate consistent income and be prepared to protect your net worth in times of uncertainty. I know you'll save more than $495. Okay. So here's what I'd like you to do now. Go to that vectorvest.com/transform and you can enter your details there. Right. You remember Robert from earlier, after he learned the information that we teach in the retirement transformation, this is what he had to say. He said, I realized I could not rely on others and that I had to take personal responsibility for my own investments. In March of '09, using VectorVest's unique market timing system, With its fundamental and technical analysis stock picking techniques, I went into the market, and by the end of that year, I had recouped all of my global financial crisis losses. Rob went on to say, I've been relying on VectorVest since then and now spend about 15 to 30 minutes a day using VectorVest to manage my retirement portfolio, giving me the money and time to do the things that are really important to me. Okay, so like I said, that's my plan, a self-paced retirement transformation series. If you order before the end of the webinar, like I said, we're going to stay on here and answer any and all questions. Okay, you can get it for just $4.95. Let me summarize everything for you. VectorVest was started in 1988 with the hope of delivering great investing and trading opportunities to Main Street. Over the next 5 weeks, I will show you how to set yourself up for a secure retirement. Okay, there's a saying that wealthy people spend money to save time, and poor people spend time to save money. Now, that is one of the big benefits of all this. It puts all the tools you need in one place to save you a lot of time. Again, you'll know how to grow your account, generate income, and protect your capital. Just go to vectorvest.com/transform and take that step towards financial independence and freedom. Okay. So what I'm going to do now is take a quick sip of water. I'm going to ask my friend and colleague, Mr. Brian D'Amico, to come in and join me and help with any questions that you might have on anything that we've talked about today. And Brian, if you're there.
I am here, Jim. Can you hear me all right?
I can, Brian. Thank you for helping out.
All right. A lot of great excitement in the chat box, a lot of interest. You kept me and John busy answering questions and comments and excitement in the chat box. So that was great.
Good.
I wish I would have saved a couple of the comments from a webinar we did earlier. I think I can remember. There was a gentleman, if you remember, Phil, who had said that he did those strategies that you talked about. He said, hey, Jim, I did those high RS strategies from 2019, just like you talked about. And he had said that he had made 196% from that day moving forward. So that was great.
Yes.
And Jim, I got one. There was a gentleman. I got to scroll back. He's actually here today. And he typed in the performance that he had. Let me just try and find it. I should have flagged it down early. There it is. I found it from Luis. Luis says, Jim, thanks to you, I no longer allow myself to take an earnings call without a put. I can't mention to you how many times this has saved me from being crushed. He says, thanks again for teaching me this in a 2-day seminar class, because you used to teach this type of material in a 2-day class, but he's like, man, this has saved me. Which, first, that's awesome.
Yes, that is great. That's great to hear. Yeah.
But that also brings up a great point from Luis, because today you were, in the time that we had today, you were able just to kind of focus on overall portfolio insurance. Mm-hmm. But Luis brought up a great point. You also teach people about individual stock insurance, don't you?
Yeah, we talk about, we call it our strategic defense system. So today we were able to talk about protecting your overall portfolio, but we go over the same process where you can buy put options on individual stocks. Usually the main reason that you would do that is usually because of an earnings report. Right? So if you've owned a stock, you have a significant unrealized gain in that stock, right? And you're not ready to sell the stock. Again, these are not swing trades we're doing here. These are longer term. So you would buy a protected put through an earnings report. We also talk about collar trades. I don't want to get too deep into that, but we talked about covered calls. You sell a call, you take the money, you buy a put. It's a very low cost insurance policy. There are a lot of ways to be proactive, right? And I've said several times through the presentation that you can't grow your portfolio if you don't protect it. There'll be nothing left to grow. So that's how we do that.
All right. So, folks, if you are I'm not sure if you remember. I'll have to scroll back and see any comments that came in the chat. But if you're in the chat box, let us know. Just type in those 2 words, I'm in. That way we can welcome you to the course. And if I missed your name from earlier, first off, welcome to the course. There is an email coming your way right now. Check your inbox or your junk or your spam folder, because it might go in there. It'll have directions to access the course. Actually, you could just go to university.vectorvest.com, and that now, of course, do that after you've already ordered the course, and you'll find the access to the course in there. But welcome to all of you who have signed up. I think this is going to be a great class. You've got an awesome instructor in Jim. He's been teaching people about retirement and retirement strategies for decades, and you are in great hands with Jim. So, Mr. Jim, there was a question earlier from a gentleman who was asking about, he's a working folk, as he said in the chat. I think his name is David. Yeah, David had said about the working folk. He's worried. He's like, is this course for me if I'm a working person during the day and I'm not able to attend those live sessions?
Yes, David. First of all, my short answer is yes. It is still for you. If that's the only thing holding you up, don't let it, because we do have. I love doing the live sessions when the market's open. We're able to go through it. But please remember, what we do is we record those and we archive them in the where the course is located. And before we're done here, I'll open that up and show you. Well, actually, I can show you right now. So when I go into the course, now this is my dashboard, my university at VectorVest.com. The retirement portfolio transformation. When I open it up, what you'll see are all the resources that we have. Right, it starts with a retirement foundation builder. So there are videos within each module. And what we will do is, once we start the mastery sessions, we will post them under each module. So even if you miss the live session, you have the opportunity later that day or early, that evening, it will be up and running, and you can get the information that you need. So by no means do you have to be at the live sessions. When you can make them, they're great. But if you can't, they're still going through live events for you to learn from as you go through. So don't let that stop you, I guess, is the quick way for me to say that.
All right. And the other thing that we can point out, Jim, if you can open up another tab on that browser that you've got there, and let's just go to the order page. Just type in vectorvest.com/transform. And folks, when you go, this is where we'd like you to go to jump into the course with everybody else. You'll see that the discount is there, and that discount's going to go away when the webinar is over. So probably about 10 minutes or less from now-ish, depending on how quickly we notify our tech team when the webinar is done. But we got the $495 rate there. But the other thing, the reason I'm bringing you here too, is if you scroll down, that's where you'll get the details. It'll tell you a little bit about the course. And so you could read a little bit about the course there. It'll break down each of the modules for you in case you were curious about what needed a refresher on what the modules were. And then below all the modules, you'll see the details of the bonuses. And Jim only talked about a couple of the bonuses today, but you can see there's a bonus module on how to trade spreads for those of you who want to take it to another level. Like if maybe you already know how to do covered calls. Well, we're gonna have a bonus module on how to generate income. That's basically another tap. Think of it that way. Jim talked about opening a tap for dividends, opening a tap for covered calls. You get another bonus module on using spreads. But the popular question in the chat box, and one of the reasons I'm bringing you to this page, is Jim just scrolls down just a smidge more on this page where it says 5 live mastery support sessions. Those of you who are asking about the dates and the times, they're all right there. They're typically on Mondays, except for that first one. That's a Tuesday because the 6th is a holiday and the markets are closed and our office is closed. So that'll detail all the things that you get. And then once you're ready to hop in, which hopefully you are now, up at the top, you just hit that button that says purchase now. And then you can, there's one other thing I just show really quick before I pass some questions over to Jim. When you click on that purchase course now, if you guys want to do that with me, you can. Just click on purchase course now. You'll notice it should bring you to a page, depending on how quickly the internet flies through here. Should bring you to a page like this. And then when you hit proceed to checkout, On the next screen, it'll probably ask you to sign in. Oh no, I guess it didn't. Usually on one of these next screens, there's going to be a spot to sign in. If it does, sign in, and that way it'll know who you are. All right, but that's how you place the order. And if you have questions, let us know in the chat or give our team a call. In fact, I'll put our phone number into the chat for you. In North America, it's 888-658-7638. All right, I'll just put that into the chat. Whew. All right, Jim, that was enough of me talking.
Yeah,
I think that's the longest I've talked to.
No, that was great. It's great information. A couple of things that came to my mind while you were talking. So people are asking about the dates. Brian showed the live mastery sessions. Other folks are asking when the course starts. Keep in mind, once you're in, if you've typed in "I'm in," and by the way, for the folks, few folks, Kieran and someone else's name I missed who was already in. Thank you, by the way, for joining up. You're going to keep an eye out for an email. Once you've filled out the email and follow the directions that you're going to get, you're going to have instant access to the course that I showed. So you're going to have access to the modules. So that is, I don't want to say instantaneous, but you give it a little while, you'll get the emails, you'll register, and today by tomorrow, probably tonight, you'll have access to the course. And then Brian showed the dates that the live stream is starting. So I just wanted to be clear on that.
All right, Jim. So we had, I missed a few, but the ones I can catch out of the corner of my eye, Jerry, Kiran, welcome to both of you. Joining, a couple of you are saying you're in the process of doing it. So I think it's Neil. Thank you for doing that. Scott's working on it. So we can't wait to see you guys in the course. All right, Jim.
Philip's in. Welcome, Philip.
Oh, cool. Welcome, Philip. If they need help during the course, I think you mentioned that there was a private email address. Is that right?
There is a dedicated email address that is for all of our students. So when you sign in, when you're in, the instructions will give you that email address. So we use that dedicated email bin with the goal of getting to your emails quicker. So a couple of things. Somebody asked about not being able to make the live session. If you remember, the modules where you learn the techniques and the mastery sessions are separate, right? So you'll have access to the modules. If you have a question about anything in that module, you send an email to that dedicated email bin and say, listen, I have a question on this. I'll go through it during the live mastery session, and then you can watch it later usually, say later, early evening, usually by then, the mastery session will be archived in the university. So the short answer is yes, you have an email bin. We respond to your emails. We'll put the questions on the mastery sessions if we need to, and all of that support is there for you.
All right. So if you just minimize this screen, I just want to give people the link and mention about the deadlines and stuff really quick. If back on the other screen, it shows the link that you can go to. I'm not sure. There you go. The VectorVest.com/transform. When you go there now, you'll see the discounted price. That $495 will go away right after the webinar. Then it'll be $595. That $595 rate will be good until Monday. All right, Monday, and then it goes up to $795, and then on Tuesday registration closes, and the price goes up to $995. A bunch of the bonuses go away. You could still purchase it at $995, but you kind of miss out on a lot of the great bonuses that you would get. And so basically, registration closes on Tuesday. All right, so now's the best time. And I see a couple of you are elite members in the chat box. So this $495 rate is a couple of dollars lower than your elite rate. So this would be actually the best thing for you. All right. So Jim, this thing, I hesitate to bring this up because we had a flood of orders earlier today, but I feel obligated to mention this. There are some people who you work with on a weekly basis that you have a coaching group.
Yes.
Retirement coaching group. And in fact, there's another coaching group called the Ultimate Retirement Coaching Group that you and Ron Wheeler work with. Mm-hmm. And there's also people that have taken a course with you in the past called the Ultimate Retirement Solution course. Those three criteria right there actually gives people a discount even further down below the 495.
Yes.
And if they now, of course, on this webinar, we don't know who they are, and we can't pull up your account. So unfortunately, there's nothing we could do in this webinar other than say, if you qualify, give our team a call. The phone number's in the chat, or you could just email our team at support@vectorvest.com. So if you feel you qualify for one of those three things, you can actually get in, I believe, for 195.
I believe that's correct.
So I think I learned that from, I think I watched the press conference of Joe Biden.
Yeah.
You kind of lean in, you whisper, it's only 195.
That's it.
Oh, so if you're interested and you meet that criteria, there, just give our team a call. They should be able to point you in the right direction. They'll pull up your account and see if you qualify, and then point you in the right direction. So it's a huge discount. But then again, registration still closes on Tuesday, so you have a window to get in. All right, Jim, you've been also looking at the chat box. Were there any questions that you saw that you wanted to address while we're here live?
Yeah, I'm trying to see. There are some great ones. You guys have done a great job looking at them. Kieran had a quick question on the. I guess they're already on the trial. Do I get to stay on the trial version throughout the course? It's more of an administrative question. I don't want to give the wrong answer, but I believe if you're not a member, we will probably extend that trial period for you for the life of the course.
Yeah, I'm pretty sure. No, here's the kicker, Jim. I from what I've heard, if you only have like a day or two left on your trial, you would want to call in just to be sure we don't, because you're at the end of your trial, you're probably in that stage where it's about to bill you for the subscription. But if you know you've got like 3 weeks left on your trial, we'll automatically take care of it. But if you know you're near the end, you might as well just call just to be sure. You place the order today to lock in the $495 rate, but then just call our office like tomorrow just to double check. Jim, I know that this is a question we get, and I was trying to answer a gentleman earlier, and I couldn't type fast enough. But I'm going to scroll back. Clint, I believe his name is.
Mm-hmm.
In today's presentation, you were talking about all the great things that VectorVest provides, and the question is, all right, there's a woman who had said, I don't currently have VectorVest right now, and will I get it during the course? So that's one phrasing of the question. Another one is, I'm thinking about taking the course. Is it dependent on VectorVest? And I was trying to type in an answer saying, we feel VectorVest is the best tool out there to help you with your retirement. Like it is flat down, whatever, the best tool to help you make faster, smarter, better decisions.
Mm-hmm.
There's some things that you teach in the course that are just fundamental principles that can be done regardless of product, whether they use VectorVest or not. Like you'll teach them covered calls, you'll teach about dividends, you'll teach about buying good stocks, how to manage them,
Mm-hmm.
and you'll show them how to use VectorVest to do it well. But in your words, I mean, that's me kind of talking off the cuff here, but in your words, how would you talk to somebody who says, I'm thinking about is the course good for me? Because I'm worried that I'm going to be locked in, that I'll have to keep VectorVest. What would you say?
Yeah, that's a great point. So first of all, once you're through the course and you see how powerful VectorVest is, I like to think you're not going to be worried that you have to stay with VectorVest. But as Brian was saying, and I agree wholeheartedly that VectorVest is a great tool to make this easier to rank and analyze stocks and recognize market trends. But you don't have to have it. I'm going to tell a really quick story. This is a true story that happened to me at a seminar when we used to go out on the road. I'll give you the Reader's Digest version. A gentleman walked up to me at the beginning of a seminar, and he was very edgy, right? Very unkempt. He looked like he hadn't slept in a week. He had some rolled up paper in his hand, and he came at me and he said, "Hey, listen, before I came here, I've spent the last 2 or 3 days going through, Morningstar and S&P, Standard and Poor's, and I've been doing research on stocks, trying to find, in his words, safe, quality stocks that I can buy for longer term." Basically, I paraphrase a little bit. And I looked at him, and I didn't mention earlier, but I'm 3 lifetimes ago, I'm a former police officer, and I was actually taking, taking this guy seriously. So during the break, I grabbed his piece of paper from him. I said, "Come on, let's sit down at the computer." And he had 8 stocks that he had gone through the entire weekend to figure out which stocks he wanted to use. Right, high relatives. I took him down. I sat him down. I pulled up one of the best searches in VectorVest to find high relative safety stocks. Six of the 8 stocks that he had chosen were in the top 10 of the list of the search I brought up. And the other two were like number 12 and 13 or 11 and 12 or something. That's kind of a long-winded story. The point of the story is that the program, we've been around, as I said earlier, since 1988. Right? It makes it easier. Is it a necessity that you absolutely can't be successful without it? I wouldn't say that. But that's my story to try to get you to understand how powerful it really is. Sorry I took too much time there, Brian, but
No, that
it's
was I
important.
love that story, Jim. I think it
Yeah,
really just shows the
yeah,
power and the
yeah,
the time
yeah.
saving.
It's a true story. But that it was an amazing, it's an amazing event.
All right. Well, Jim, I think that brings us to the end of the questions that I've seen. So, folks, if we missed a question, you can always give our team a call. We got people waiting on the phones, 888-658-7638. The phone number is in the chat box. Just go there. Or just if you know this is right for you, go to vectorvest.com/transform and get yourself in there. And other than that, Jim, I'm going to pass it over to you to wrap things up for the night.
Great, Brian. I'm gonna take 10 seconds and comment to it. Just says S in the asker of this question, but he's talking about WSTs, going over some of the fundamentals, and he's wondering why this is a buy rated stock. West Pharmaceuticals, I own the company. It's a great company. Relative value, safety, timing, the comfort index. We didn't go through that. Earnings growth rate of over 30% per year in earnings growth rate. Is it an overpriced stock? No. Is it overvalued? It is the way we calculate that, the value to price. But when I see that, I look at the earnings growth rate. Okay, the PE ratio is a bit high, but you've got a stock that's grown its dividend that has a 30% growth rate. And here's my answer to you. I felt compelled to respond to this in case anyone else was looking at this. Here's my answer to you. Right? I could just leave it at that. Yes, that's the kind of stock I want in my retirement portfolio, is the short answer to your comment. Okay, with that, I want to thank you all so much for taking the time to be here today with us. Um, did I have my on-air screen? Did you guys see that when I went through the WST, Brian, or did I have that hidden?
Uh, no, I think we would. It did not show VectorVest.
Oh, shoot. I'm sorry. Well, I'm going back. The question was on WST. I had the stock viewer page up, and I wanted. Take an extra 10 seconds. I'm sorry. I had my screen paused. Okay. Yes, it's an overvalued stock, but it also has a 30% earnings growth rate. Relative value and safety are excellent on the VectorVest scale. Comfort index. We didn't talk about it, but that's also excellent. Okay. It's a buy rated stock, and what I did was bring up the graph, and this is my answer to, is this the kind of stock that I want in my retirement portfolio? And the answer is an unequivocal yes, it is. I'm sorry. Sorry, I
It's
had
in
my
mine too, Jim. I know
yeah,
you said it was in yours. It's in
yeah,
mine.
yeah. It's a great company. So um, anyway, S is all it says here. So thank you for the question and giving me the opportunity to do that. I want to thank everybody for taking the time to be here. Even if you're still on the fence, you can still join the course if you decide to at vectorvest.com/transform. If you're having any issues, as Brian said, give product support a call. That number is listed there. I just want to thank you again for taking the time, and I want you all to stay safe, stay healthy, and we'll see you next time. Thanks, everyone.